patchwork approach of fiddling a bit here, fiddling a bit there. That is why the UK tax code, if you were to lay it end to end, it's all in these big kind of like books, like dictionaries that you might see in your accountant's office. I think we're already up to about 7 or 8 feet at the moment. The maths I've seen is that would raise an extra 6 billion. Remember the tears and all of that, you know, and the bond market wobbling because they thought that she was going to go. I mean, that's a sign of what's really in charge here. Yeah. You've got the electorate and you've got the bond markets who are going to be passing judgment on this budget. So taking a step back, we are over-indebted. As I heard somebody say on Instagram this morning, Britain has maxed out its credit card. We need to do something. Now, personally, I suspect a lot of people on the left and the right of the political spectrum would really like to see Labour revisit the cuts to spending. Because if any of us were sitting around the table looking at our budget saying, oh, you know, there's a hole that's opened up, need to make some savings here, that's the first thing we would do. What can we cut? Not how can we raise money through tax, which is obviously what she's contemplating doing. And they're warming the electorate up for this because it is going to be a breaking of the manifesto pledge. Even if they do this kind of 2p shuffle, it's been termed, add 2p onto income tax rates across the board, but cut 2p from national insurance rates across the board, because that way, if you're a working person, it will even out. Your payslip will be the same. But if you're somebody who is making money through investments, dividends, company directors, that those people obviously won't get the benefit of the.
But isn't that robbing Peter to pay Paul? Do you see what I mean? The employer will like it, obviously.
Yeah, the maths I've seen is that would raise an extra 6 billion a year, because those groups, people who make money from investments, which includes buy-to-let landlords, another very popular form of investment in Britain, but also pensioners, people who are drawing an income from their investments and can't realistically go out and work and earn any more money. So I think that is going to be the big political risk for her if she does this, because pensioners that I meet are already incensed that they're having to pay any tax whatsoever, because the state pension is now pretty much level pegging with where the personal allowance kicks in. Even though you say to them, well, look, you've built up your pension funds tax-free. They've grown tax-free over the years. Now you've got to pay a bit of income tax. You know, goodness knows the rest of us have been getting hammered with income tax, with that frozen threshold and the problem of fiscal drag. You know, the more we earn, our pay goes up with inflation, and the more of it is squeezed into those higher tax bands.
There's one moving part which we have not addressed in all that, which of course is spending, people's ability to spend. So what I'm seeing from this, I don't know about you, an interest rate cut to come before Christmas.
Thursday.
Well, let's see what happens. I think that inflation has been slightly better than expected. Obviously, we're going to get those big rises that were entirely caused by politicians, national insurance, minimum wage. Those will start to drop out eventually, and that's going to help things a lot.
You've got the supply chain as well, which is still a problem.
Yeah.
Thank you, Mr. Trump.
I mean, I am not banking on interest rate cuts happening. So, confession time. I've recently moved house. I've written about it in the FT, and I have taken out a mortgage, and I've decided to go for a 5-year fix, because at the time I took it out, the rates for a 5-year term were pretty favourable, and I just thought, realistically, do I think that it's rapidly going to get much better than this over the next 5 years? Or do I think actually we could have a sustained period where inflation proves pretty sticky, particularly because we are an island nation? Problems of Brexit. There you go. I've mentioned the B word, which Rachel Reeves has been carping on about this week. I don't think
grossly overplayed, if I may say so, but you would expect me to say that.
I would expect you to say that, but I am not banking on interest rates getting as low as we would like to quickly. So when I was looking for my mortgage deal, the factor that I was most interested in was how much could I make overpayments for every month. Different mortgages will allow you to make, different ones. And if I've got any spare firepower in the coming months and years, with stock markets at an all-time high, prices looking very toppy indeed for the magnificent 7 US stocks.
Are there any particular sectors internationally that appeal to you right now?
Ooh, that is a tough one. Well, yeah. As you know, I am an index fund investor. I don't have the time to study the markets as much as I would like to, and I also look at that big body of research about who's the most likely to beat the market. Is it the person who buys the whole of the market and invests money regularly, or is it the person who tries to pick the best trends? And I don't rate my chances personally as a fund manager. So I'm a big fan of index funds, and as I've said, at the moment I'm kind of investing a little bit less into them every month and a little bit more into the mortgage overpayments, which means that I'm not a classic index fund investor, because they look through what's going on in the market. They don't try to time the market at all. But I just feel that we've had such a huge run up. Again, we've had all of these run ups and then a little dip and a run up and a little dip. And yes, I'm feeling nervous about what.
So you're in Jamie Dimon's boat and Larry Fink's boat, saying we could see quite a measured correction at some time.
Yeah, I mean, that's what markets do. And, having lived through previous corrections, I joined the Financial Times in the teeth of the financial crisis in 2008. My goodness, that was an awakening.
Baptism of fire,
the senses. So, it's what we expect. I'm in my mid to late 40s, so I know I'm hopefully going to have a few more, investment cycles in me before I need to get the money out of my pension or out of my ISA and use it to retire. But as a purely personal decision for me and my sort of like my 5-year plan for the next 5 years, I'm thinking, okay, I would like to, push that lever while interest rates are high. And that's a personal risk that I'd like to manage. But if we do see markets come down, then yes, I will be on the sidelines and willing to buy. In terms of sectors, I've always been interested in smaller companies. So I can't tell you exactly which one, because I don't know. I have a regular investment plan set up, so it all does it in the background while I sleep. I do have one of the smaller company ETFs in my own personal portfolio. Yeah. Small companies have got the potential to grow faster. I read a very interesting note from Tom Stevenson at Fidelity last week, making the case for UK smaller companies. Of course, Fidelity has got an active fund which is very successful, that for many years has specialised in spotting those. But I think like UK stocks in general are very interesting to me at the moment. Obviously, yes, there's home bias in there, but there's also reporting bias, because the two sectors that I've reported about the most in my career as a news journalist are real estate and resale. And as you were saying, David, the resale world, very much in the doldrums at the moment, but the property world, even more so. And that's partly a function of what's happened to the office market since the pandemic. But when you look at the valuations of some companies like British Land Securities, some of the bigger UK
Hammersons and these sort of people, yeah.
Exactly, because retail and property is very interconnected. No, disclaimer, I don't own any of these stocks and I'm not planning on buying any of them. But I think, there is a long-term recovery story. Interestingly, story in the weekend press, over half of us are using AI for financial advice. Now, that is a double-edged sword. Yeah. I have written articles in the FT about this, and I do think it's fantastic in its ability to simplify and summarise complex information. Like if we were talking in the pub and you said, oh, should I open an ISA or save money into a pension? And I might say, well, on the one hand, on the other hand, I'd give you the top lines fairly quickly to get you into the frame of mind where you can start thinking about something complex. you sort of have a small bite before you have a bigger bite. And that's what the AI is doing. And a lot of the financial advisors that I speak to, the really good ones, they're not worried by AI because they think that the kind of people who've got a lot of money and are still, the kind of people who've got a lot of money and can afford to pay for financial advice, they might use AI to get them up to speed, to have a more thorough and exacting conversation with their financial advisors, but they won't rely on it because I think the fact that it is unregulated, it tells you things so confidently in this tone of voice that sounds like it's always right. It is possible to get stock tips from AI. I made a Money Clinic podcast about that with a young woman in her late 20s who asked it for stock tips. She actually made money. That's not an endorsement. No. I think, these things should come with a big warning, but it is a way, like we've had before with the internet, with social media, now AI, for people to get ideas about stuff that they can then action. If they realise that, the action is on their own head, they've got to take responsibility for that decision, and that the option of professional advice is still there for them should they want it, that's fine. But a lot of the ChatGPT and Perplexity and other forms of AI that I've been testing out, it's not obvious when it gives you an answer that this is not financial advice, this is a suggestion.